Good afternoon, everyone. Hope you can hear me okay. It was fun yesterday going over 3 reasons to do a trade. I got to tell you, this is a scary market in here. I hope you can hear me. Can you hear me okay? Great. Just to let one thing about trading, and I just can't stress it enough, is trying to squeeze out a profitable day even if you screw up. So let me show you what we're talking about, because I don't care what anybody says on Twitter, you're gonna lose some money sometimes. So I'll show you what we're talking about. Number one, I think you can see the screens, and I'm having a problem with my highlighting. But when you saw SMCI get absolutely destroyed, see that? Yeah, that's what I was warning everybody. SMCI, Netflix, all with these topping formations. Yuck. So it's really hard to go and buy, let's say, a Microsoft, betting on it going to a strike price. So the thing about that, well, we did it anyway. So we did a butterfly in here and it didn't work. So we lost 50 cents. 50 cents in Microsoft. Boy, do I draw bad. That's my lefty kind of stuff. So we lost 50 cents in Microsoft. That's it. Take your loss and you're gone. All right. On the other hand, then we bought VKTX. Now, why did we buy VKTX? Because it's not the Russell going down. The bonds are helping the Russell, which is going to help the biotechs. And this went right to support. So we bought this right here and posted right here, right there. Did I buy the bottom? No. Did I buy the consolidation? Yes. So we bought it here. Then we sold some here. We bought it here. We sold some here. And we're now back in only half. Now, why are we only in half? Because the whole market's plummeting. I'm not staying in more than that. That's for sure. But I just want to let you know, so you squeeze out a living in here, you lose $50 in Microsoft, you buy 100 VKTX, you make about 90. So you come out ahead. Now, that doesn't mean you're going to stay ahead when everything is plummeting. So when I'm watching everything plummeting other than Amazon, do I play anything? Well, at least you see Broadcom coming back. At least you see that. So this ATR trailing stop has been pretty darn handy, and I'll show you what we're talking about. If it gets over the ATR trailing stop, which is what my go-to on a 1-minute chart. So just a second. So if it gets under the ATR trailing stop, it turns red. Over it, it turns green. Just to let you know, I only look at 2 things in here. So intraday. So we could look at the VWAP. No doubt you could look at the VWAP and all that, volume weighted average price. But I found that to stay on the correct side of the market intraday, I'm talking about intraday, you can use either a 2-minute or a 1-minute. I use a 20 and I use an ATR trailing stop. That's all I'm using. The reason is not that it works verbatim to just buy something. You're going to find that when something has a protracted move down, the first move above the ATR trailing stop isn't to be trusted because it gets too overbought, like you see in Microsoft. Remember, everybody wants to chase it there. The one thing I will tell you, that when you see a 4-hour plummeting, but last night, like when the markets got toasted, you got to watch that ATR trailing stop at least on a 5-minute chart. And the way I'm looking at it in there, it doesn't mean you're going to make money, but it means you'll lose faster if it gets over you'll lose less fast if it gets over something. You don't want plummet mode. you want to have this at least stop going down. And if it stops you, well, you're just not going to lose that much. You're just not going to lose that much. And I'll show you what we're talking about. Number one, wire market's going down. You could say all about Israel. It's not, Israel and Iran. It's that. Yeah, it's that whole breakdown. So theoretically, this could go down by this amount. Now, this is what I predicted for everyone. And by the way, Chart Patterns Mastery, I sold another half of a half SMCI at 63.70. So we're playing with house's money. Now, if the market stabilizes, I'll buy more, just to let you know. But right now, you see that. You see that right there. You see Netflix doing that. Usually near bottom of the market. Now I'll show you this. Usually near bottoms of the market, you have to see the leaders break the 50 moving average. I've done it 43 years. Number one, if you see the XLE rally, that's usually the top of the SPX. That was a very, very unpopular theory that happened to work great. So just, keep that in mind. Second thing in here, price above the 50. That's what this is. I took every stock over the 50 that was over $50. That makes it easy. Over the 50 and 50 in stocks only, not the exchange traded funds. And I want the average volume over 500,000. You're going to see it ain't many. And then what you do is you go through and you go into here. And I'm going to go to the 1. And you're going to see that the biggies are starting to break the 50. Not everyone. Just keep that in mind. Not everyone. But usually the bottom of the market is when all the leaders get destroyed. Like you're seeing in SMCI. So the cats, the deers, that's a whole different thing. But I'm talking about the biggies. Now, you might say, well, where are they in here? That's because they already got under the 50 this morning. So you could take the tech stocks and you could take, instead of technical, there's 122. Look how they've gotten under the 50. The orange line is the 50. MicroStrategy under the 50. Lamb under the 50. ASML. I don't know why everybody keeps averaging down on these. Here is where you average down, is when it's in an uptrend. Look at all these that are breaking. So just keep that in mind in there. That's usually the sign of a bottom. I mean, you got to have a bottom by having the panic. The problem is you don't have that kind of reversal candle yet, and you don't have a lot of support on the way down. So you got to find the support areas. NVIDIA, 800, and then the gap. Lam Research, the gap. It's close. Broadcom, there's one of the support. So we're getting there. But if you want to get bullish, you really want to see that reversal candle followed by a consolidation. So I'll show you some examples of that. So just wanted to show you that. So I'm not sure what you mean. Please just look at it more. I'm always looking at the markets, just to let you know. So this is the way I look at it in here. First things first. What happened last night? Well, we know about the Iran thing and all that. But what you're going to see in here is what happened in the middle of the night. I was on with some of my trading friends talking about it right here. There. That, unfortunately, my drawing tool isn't working. But the key is you don't want to buy on the way down, because if you're wrong, you're going to lose fast. You want to buy when it consolidates. So Chart Patterns Master, I got stopped out on the rest at 63.5. But I'll get right back in it later. I just want to make that clear. But we made money in it in VKTX, and I'll go right back in it later. But when everything's getting plummeted, yeah, I still like the idea of the biotechs. Just don't know if I like them now. But this is what I want to show you last night. So the markets got absolutely destroyed. We know that. And there's a nice bear flag. I wasn't even watching the market when it did that. But if you're going to buy, you have to see that kind of consolidation pattern. So you just have to. And you have to see it over the ATR trailing stop. So, like I said, the first time it gets above it, it's going to create an overbought condition. And that brings me to the next thing. And it seems like a lot of people don't know this part. In fact, just to let you know, Chart Patterns Mastery, I'm getting back in at 63.50 in VKTX. The bonds are too strong. That's good for for the biotechs. So I'm getting back in it. So I just want to let you know that. So getting back to it though, this is what I want to show you with the ATR trailing stop. It seems like a lot of people aren't watching this. It's not just the ATR trailing stop, it's also including the MACD. And it's also, and we could do a 1, 2, we can do any of these. But the thing is, you also want to include the 20 moving average. Very important. And I'll show you why. So when we're doing the ATR trailing stop, what you're watching in here, it's an average true range. So all you're doing is when I take a 9 and a 2.9, 9 and 2.9, you could take exponential or simple. We've messed around with both. Just so you know, we've messed around with both. They're similar. But the whole idea is you're taking 9 periods and you're looking at the average true range, and then you're multiplying that true range by 2.9. So it's a channel. So you're going to have it down here and up here. I don't use the downy. I'm just using the trailing stop. But the thing is, if it moves a lot, the average true range widens. So that means that the product you're trading is too far from the ATR trailing stop. So what's that mean to me? That means you got to use some other average. So let me clear this and show you. Oh, this is the NASDAQ last night. So yeah, it got pummeled. So it got too far. The average true range widened. So you got to use something else. And that's why we use a 20 simple. Now, keep in mind, most hedge funds use, you can ask Penn in our Chart Patterns Mastery. She worked for a hedge fund for 40 years. They use the 9 EMA, the 20 SMA, the 50 SMA, the 200 SMA, and then really, like you said, Paul Tudor Jones uses the 400 SMA. Very interesting. Very interesting. So just keep that in mind and in there. That's what the hedge funds use. So that's what I use. So, but this is what I want to show you. So when it got too far away here, now there are 2 ways to play it. Let's say you're short the NASDAQ. When you see that whoosh, and it's this far away from the ATR trailing stop, that's usually when I cover at the minimum half. Then you get the rally, you get the overbought rally, and then you test the lows. So too far away again. So just keep that in mind that it didn't get over the 20 till really in here. So just keep that in mind. By the way, Chart Patterns Mastery, I still have my stop in VKTX of around 63.5. Markets are just too darn scary right here. So just, definitely keep that in mind. But getting back to it in here, I can show you right now SMCI. So as you see in SMCI, it stayed under the ATR trailing stop. A crazy stock, like a $900 stock, I'll use a 2-minute instead of a 1-minute. So you see it stayed all over it. So it got too far from it, so maybe you cover some in here. If it gets over it, yeah, you might cover the rest and get out too early. You can always, on a crazy stock, you can get back in here. Don't be afraid of getting stopped here and reshorting there. There's a little bear flag for you. But I'm just telling you, you want to see the whoosh. And a whoosh to me means that getting too far from things. Now, I'm not buying SMCI. I'm just showing you an example. So let's take another one. Let's take the Russell. Russell got pounded last night. Yeah, what happened in the Russell? The same darn thing. It popped its head above things, got too overbought, so you don't trust buying it there. You want to see the slope of these start to flatten out, which you saw. So I don't, I'm telling you right now, I've done this since 1980. So 1980, 84, 44 years. I have never bought the bottom and sold the top. If you see anybody on Twitter that talks about buying the bottom, selling the top, I would stop following them. I never do that. It's the direction I care about. It's the direction I care about. So here, yeah, I'm not buying on the way down because you don't know when it's going to stop. And if I'm wrong, it's going to go down too fast. So just keep that in mind. That's the way I look at it. Then it stabilized. Now that brings me to something else. Brings me to something else in here. And that's this. One of our loyal subscribers in the Chart Patterns Master, and we have a lot of new people. I'm very excited about that. And like I said, I'm not going to be perfect, but the thing is to come out ahead during the day. Come out ahead during the day, and that's all you're caring about every day. So, and I talked about this yesterday, and I'll talk about it in the YouTube room. When I talk about that, I turned $200 into $25,000 in 2 years. And that's what I used to buy a seat on the floor in the CBOE. It wasn't to brag because the most I ever made in a day was 300. The point was I made money almost every day. So if you go over and make $50 a day, believe it or not, there's 20 days at the minimum per month. So you make $50 a day, that's $1,000 a month. That's $12,000 a year. That's what I did for 2 years. I averaged $50 a day for 2 years. And that's how it came out to $25,000. I never hit a home run. Never hit a home run. Now, when I was on the floor trading, darn right I hit a home run. One day I made $500,000 in one day. Guess what? I blew it all that month by taking even bigger shots. Yeah, blew it almost the whole month. So I lost $500,000 on taking shots. Luckily, then I made it back in the crash in 1989. If you weren't alive, there was an earthquake during the playoffs in San Francisco. It just coincidentally is when the United Airline merger fell apart. So I bought a lot of puts, and that worked. So I made it back. But the key was I really don't like going for home runs. It's sort of like how many in here play scrambles in golf? So how many times do you try to swing too hard because you're trying to have the drive for everybody in your foursome? So what happens? That messes up your entire swing for the rest of the year or the rest of the round. It's like this, trying for home runs. Trying for home runs will just ruin your trading strategies. I want to consistently make money. So that's what I care about. I know that sounds corny, but that's the way I do it. SMCI delayed their quarterly report. So, Penn, I know you're in the essentials room. If you can repost that article, I'll post it in the YouTube room about SMCI and everybody spooked. But I will tell you, the higher the bonds go, the more likely I am to play the interest rate sensitive Russell. So keep in mind, this is NASDAQ related. Like I said, you need for a bottom, you need so many NASDAQ stocks to get destroyed. It's not the ES that looks that bad. But if I'm going to buy something, it's going to be something that has gone down because the bond market has gone down. And now it's going up. And I'll show you what we're talking about. So here is the Russell. The Russell is very interest rate sensitive. Very interest rate sensitive. So if you put the Russell and overlay the bond market, you're going to see that as the bond market went down, the Russell went down. So, or stopped going up. But now go to a 4-hour chart and you're going to see that it's starting to change. This went down, formed a higher low, and this made a lower low, a nice divergence. And that's why I was playing biotech stocks. So if the thing that made this go down all of a sudden changes, that's the area I want to be in. So just to let you know, that's why we're messing around with a biotech stock. So Chart Patterns Mastery, did you see I got back in? So I hope you saw I got back in VKTX. So just keep that in mind. Now, just wanted to show you that. And in pen, if you have that article, but SMCI basically, I could be glib and say, oh, it was a top and all that, but it's really because they had bad news. But I'm telling you, whether it's Netflix or SMCI, a top is a top. You see the gap, and I filled the gap. So it still hasn't turned. If you see something fill the gap, number one, you have bad news. I'm not touching that stuff. But if you do want to partake in trying to pick a bottom, you want to see a reversal candle at support. Do you see a reversal candle? I don't see it. So that's another thing. A lot of times we say it has to cross something. Well, crossing something can be a 5-minute, at least on some time frame, cross something. It still hasn't crossed anything. That's what we talk about when we say it hasn't crossed anything on any time frame. Everybody wants to buy here. I would rather buy on a sharp rally and a bull flag. So just let you know on how I want to do it. Now I'll show you what we're in. There we go. Sharp rally, and it's trying to form like an inverse head and shoulders. Not really yet, but that's what we're in. Where's our stop? Our stop is going to be where we originally got in all of it. So we bought it here. We sold some here. We bought back our full amount here. Like all this has been posted. We sold half again here. And I just told you verbally, I got back in here. So we're still in this. So the higher the bonds go, the more likely biotechs are going to work. On the other hand, the NASDAQ might pull down everything. That's why you got to have stops at the low. We're already playing with house money because we bought, sold. But don't try to be a hero in these things. You got to wait for that kind of consolidation. At least that's how I'm doing it. And in the long run, that's what works. So then you have the if then. So the if then is if the markets can rally, probably biotechs will kick in. On the other hand, if SMCI is on the low and everybody's worried about it, and they're worried overnight about geopolitical risk, I don't want anything overnight. I just don't want anything overnight. If I want to play intraday, fine. You see the Russell. So I'm just telling you, the higher the bond market goes, the more I will gravitate in the Russell stocks. That's it. You see on how that looks on the right. That looks a heck of a lot better than other stocks. Doesn't mean it's going straight up, But if I'm going to take something, I'm going to take what is already forming that kind of thing. Let me take it on the left as well. Now, keep in mind, I'm also talking out loud of how I'm doing this. There. You see on how I worked off that MACD by retaining somewhat of a bullish structure above support. So that's why if the bond market stays up, I'd rather play the Russell, but I don't know if I want to play anything when the NASDAQ looks like that. Keep in mind, it's not that far from the bottoms of last night. So just, that's a little scary. So, I mean, obviously it's scary. I don't want to just be a hindsight announcer, but until I see some stabilization, I'm not buying the NASDAQ. What would make me buy the NASDAQ? What would make me buy the NASDAQ is if SMCI came out and said, yeah, we're going to file in a week. We're just delayed a little. That would get me bullish on everything. But we don't have that yet. So keep in mind when this got murdered, SMCI, NVIDIA, Meta looked so good yesterday. Now it doesn't. We got out of a ES call spread and broke even. That right now we would have gotten destroyed. So all we have right now is a stock that might benefit from the bonds, but is going to get hurt from the NASDAQ. And that's where we are at the moment. And if this has a whoosh, well, this is where it gets scary. And I'll show you why it gets scary. Because on the one hand, you have the NASDAQ. Remember I showed you what happened last night? Well, your support is all the way here. It's almost there. So then it comes down to, do you mess with a biotech stock when the whole market might drag it down? It's a tough call. So VKTX, I'm getting out of that a half of a half right now. It's just too scary for me. So I'm only in a quarter position right now in VKTX. You see what happened. Even though bonds are on the high, well, there's another thing that's scary, and that's crude oil is rallying and gold's rallying. So not only do you have SMCI down, but you have that gold is rallying and on its high since last night. So you got geopolitical things people are worried about and SMCI that people are worried about. So, you got that, but you have the Russell refusing to go lower. Which is going to win? That's why you stay in a quarter size of VKTX and then be pissed off if you're only in a quarter and it goes straight up. And if it goes down, you feel like a genius because you sold 3/4. And like I said, don't get me wrong, I'll get right back in that stock. So that's where we're trading right now. Now, theoretically, this could go all the way back to here, which is down 286. How do I know 286? Because I bought the Qs last night. Now, I'm not a genius here, and I bought them too early, but let me just tell you, I got out this morning. So, but I want to show you what happened last night, and in geopolitical stuff, this can happen. All right, see that? I bought it here, and then it stopped trading. Yeah, that was scary. Did I want to buy more? Yeah, I wanted to buy more. I don't even know if that's a right quote because NASDAQ had already rallied. But I got out up here this morning and thrilled. So, in fact, where'd I get out? I got out of 422 up here. Then mad because it went even higher, but still came out ahead. But let me just tell you, because you have significant others. I only bought 10 shares. I don't feel like getting put in the doghouse by going and buying like 300 shares. So I made 4 points on 10 shares. That's it. So don't think I'm some kind of genius in here. That was all I bought. But like I said, the big place is the NASDAQ down 288. That was big support because I watched it. It sat right here for like 2 hours. So that would be a logical place for it to stop. So that's where I am right now. So some of these, like I said, bonds are helping the Russell. The Russell, you see what's going on. Is it going to hold here? Well, if the NASDAQ goes back to down 286, probably not. But I don't think it's worth playing until I see a defined bottom in the SMCIs of the world. So I'll show you. I'm watching all of these. In fact, if you want, I can't do this in the YouTube room, but if you want this in the essentials room of the ATR trailing stop, here you go. Now, keep in mind, this is a Thinkorswim share. This is not a Schwab share. Yeah, sorry about the spelling, but I'm trying to trade and monitor for everyone. But if you want to know how to save it and put it on Schwab later, and this was also a loyal subscriber figured this out. So what you do in here is this. You go to your notepad. You go to your notepad. You put in that link I just showed you. And you wait a day or two. And then you add it to open shared item. Open shared item. It won't work right now in Schwab. Just give it a day. And then it'll work. So that's where I am right now. Not touching this till it's down 290 and the stocks that made it go down start stabilizing. So you don't have that yet. So it will work now in Thinkorswim, yeah. So here I'll go to setup and show you. There. And it'll be in there. It looks like it's going to lock up my computer, unfortunately. But yeah, that'll work. but that'll work. There you go. So I just did it and it came in here. Just crazy, but it worked. There. So yeah, it works in Thinkorswim now. But like I said, it'll work. Schwab's transitioning, and unfortunately, and I'm sure when it's the busiest. And by the way, Chart Patterns Master, it got stopped on the rest at 63.25. We still came out ahead with house money. So net, we're up today. Thank goodness. And like I said, the big thing in here is definitely the things that made it go down. If they start stabilizing, you're not seeing it. The only one you're seeing stabilize is like an Apple. But I need to see this down 286. Now, that sounds silly, but I stayed up real late watching this and it stuck at 286 for hours. So that's probably support. That doesn't mean to buy there. Then it means to look for a reversal pattern, and I don't see it yet. Now, the first thing I would be watching is if that NASDAQ gets to 288, which is close, is if the stocks have made it go down like SMCI, hold and start making higher lows. But I don't see that at the moment. I want to say, like I said, 286 to 288. And like I said, that doesn't mean I'm buying there. So, I mean, nothing is acting well. And you have gold near the high. So I just want you to know we're not doing a lot in here. So not going near gold puts, not going near anything till I see a bear flag. So gold puts, we did a spread. We're going to lose money. We have all the two trades, well, now three with Microsoft that are losers over the last couple of weeks. When I see this, do you see Russell over here? If I see gold look like that and a bear flag but no support, darn right I'll play it to the downside. And the other, I totally see what you're talking about. The gold really is doing blah with geopolitical stuff, no doubt. And it had this reversal pattern. But you just don't have that bear flag yet. So just, keep that in mind. There's your 284. Between 284 and 300. That's what you're looking at. Like I said, that doesn't mean to buy there, but look at that. It's stuck. Yeah, that's a coincidence. But keep in mind, the thing that made it go down is SMCI on the middle bottom. And it stopped going down. And this is at support. Now, that doesn't mean I'm buying it. I'm just giving you a heads up. None of this looks great yet. I need to see a turn. Netflix tried to have a turn right here, but SMCI destroyed it. And then they destroyed every high flyer. But you see, all of a sudden they stopped going down here, right when this got to down 284. So now, yeah, hope springs eternal. But when you see a group stop going down, and they were the reasons the markets went down in the first place, at least you can look for some kind of consolidation on the upside. At least that's the way I'm going to do it. And the other thing, I know bonds are up. You know, a little flight to quality with the bonds, the crude oil, and the gold on the upper left. Totally see that. So I'm telling you, though, this Dow Jones Commodity Index, the higher that goes, the less this is going to be back up a point. So now, if geopolitical stuff goes away and this stabilizes, yeah, you'll probably see the bonds go down. And I like your idea about gold puts. Definitely like your idea about gold puts. But do you wait till Monday? That's your big question. Because we're caring about direction, no doubt. So I would love to see gold look like this right there. Problem is, it was near a lot of support, and you still had this geopolitical stuff. We're watching that trend line. If that breaks, I know that's 220. It was there this morning. Yeah, you could go to here. I just don't know if it's the right time because the whole market's plummeting. So I just don't see why to mess around yet. Now, this becomes the scarier part. The NASDAQ is where it was last night. In fact, let me see if I can put this on a comparison chart for you. So on the left, NASDAQ last night. Right there. Now, this is being led, obviously, by SMCI, but on the right, this is last night. Yeah, that's a lot lower. That's another 40 points. Now, there is support here. See the support? Prior tops didn't work. Blew through it. That's like this at the minimum going to 5,009. That's support. But this is all the way back here. That makes you wonder if this is going all the way to here. But before you're like, I want to buy when it gets there, wait for that kind of consolidation pattern. Like a whoosh followed by a rally and a consolidation. So give me 1 second. Sorry about that. I'm back. Sorry about that. So, just to let you know, and you're right about the financials holding up, but the problem in there is if everything goes down enough, that's going to go down with it. That's always the problem with these things. So, they can pull everything down. And as you see, here comes the scary part. The whoosh, the arrow right here. So if this doesn't hold here, the NASDAQ didn't, then you wonder about all the way to here. That's about another 30 points. So at the moment, and you see it pulled down the Russell. So that's where we are right now, which means sort of a hurry up, wait and see. Now, when you get to those levels, and if I see the SMCIs of the world stabilize, yeah, I'll look to buy something, but not now. I just don't see the reason. So we have our pest control person here. And if you hear my beagle like howl, I'm sorry about that. So Roblex, let's look at that. So you're going to hear it. Roblex, yeah, you see the support. Yeah, no doubt. There's your support zone, but if everything goes down, that's going to go down with it, no doubt. So I haven't done anything when it comes to these. If I do anything, and I see what you're talking about in there, Mike, I'm watching, though, this area, and definitely it pulled down the Russell. I mean, you see the Russell spike last night, but now that these are going to the NASDAQ to where it was last night, everybody's going to think the rest are going to go there. So that's what's going on with this. And as you say, the ES is doing what the NASDAQ's doing. So, but I totally see these trend lines, and the probability of those breaking up goes down dramatically if the rest of the groups are getting nailed, which is what's happening. Now, I know, and you know, that we look at cheap calls now. So, because you're getting a little, panic in here, I would like to see SMCI get over this. But keep in mind, in the grand scheme of things, what's going on, this just started breaking down. So this could go all the way, probably on a panic to here. But I just don't see the reason to go crazy on the upside. Now, I'd get interested if it popped above there and formed a bull flag. So just to let you know. And then I'd look for what refused to go lower. So, I mean, that's what I do. Oh, Penn, we were talking about if you had that post about SMCI. So just to let you know, and this was on, I post charts Sunday night, Tuesday night, and Thursday night. It would have been real easy to try to show bullish ideas last night. This is all I showed. because everybody thinks we're going up. Showing that gap, which it did, that gap, which it overshot to the next gap, the Russell, which already went there last night. And then I showed this. There's your gold you asked about. That's last night. Then what I showed in here was the 200 moving averages, just so you have a perspective. That's a lot lower. There's all your 200. Now, you might ask, why the heck are you showing that? Number one, a lot of times overall markets go to those. And then you see the China's already there. The Russell's there. The transports are way under it. So, you see Netflix. That was last night. Once it gapped down this morning, you're talking about that gap at 550. So just want to let you know, I do these almost, Sunday night, Tuesday night, and Thursday night. So that's what I do. Now, if you want to play a bounce, the problem with playing a bounce in here, is you don't have that reversal signal yet. So I just can't, in good conscience, go and buy the Russell, even though if I was going to buy something, it would be the Russell. But I need to see these stabilize on the bottom. So you just haven't seen it yet. So it's a good question about the Russell. And let me see if I can share this. I just downloaded it. So thanks, Penn, for showing that. There. They announced preliminary results ahead of their routine stuff. And that's all they did. Announcing preliminary results. Now, I will tell you something interesting, that they didn't pre-announce the same kind of way, I think. That's what you're saying. So last time, that's why they issued a press release, the one in January, ahead of earnings, with preliminary earnings. This time they didn't, so everybody's spooked. But what are you watching? I'm watching the NASDAQ down 315, and SMCI has just rallied 9 points. So this is right at support. I don't know about the Russell with the bonds selling off. And in answer to your question, Chinu, is if I saw the bonds up 30, I'd be much more interested in buying the Russell. But I just don't see it at the moment. And like I said, you might need the ES down 65 to 70. That would be real ugly. But I'm telling you right now, I cannot go into here and buy the Russell because of this. Even if I want to buy the Russell, if I think that will be the outperformer. When I see the NASDAQ getting near the low from last night, and now I see the S&P trying to get to it, just keep in mind that was here. So I'm having a tough time. I'd much rather buy the Russell right here if it has a reversal and a bull flag. We don't have that. So, I mean, just, that's what I'm going to be watching. which means at the minute you don't have to do a thing. Do I think there's going to be some wild stuff at the close? Well, I think if SMCI stabilizes, let's put this up here on a big old chart. I'm going to take off all these lines. It's not yet. Stabilizing to me means a rally followed by a bull flag, which means you're not going to get the bottom. But yeah, if I see that, try to get up to here and then work off some kind of overbought, temporarily overbought by forming a bull flag, heck yeah, I'll look to buy the Russell. So, keep in mind the NASDAQ is now testing the lows, not all the lows, but a lot of lows from last night. And like I said, Genu, if the gold's bouncing and the bonds, like I said, I could not buy bonds if the commodities were rallying. The bonds is a flight to quality, no doubt. But I just can't in good conscience buy the bonds when the commodities are going up, and I can't buy the Russell if the bonds are going down. So sure, a lot of this you're probably overdone on the downside, but nothing looks good. Just keep that in mind. Nothing looks good. Maybe a little Netflix. That's what you're looking for in SMCI. If you see that in SMCI, that'll probably save everything. But I'm not doing it now. I'm waiting for some kind of reversal, which we don't have yet. And the problem on the way down is these things didn't really have bear flags. They just plummeted. So, and no bull flags, that's for sure. Now, like I said, if I see SMCI miraculously start to break up and form a bull flag, sort of like Netflix is trying to do, yeah, I'll try to buy something. But at the moment, I don't see it. So I know I have to go. Thanks for being with me. I would watch for gold, bonds, and the thing that made it go down the most, SMCI, to see if they try to mount a rally. So take care. Talk to you later.